Joining us here on BNN Bloomberg, I'm John Ehrlichman. Well, yesterday, if you were watching our morning programming, you might have seen the Finance Minister, Bill Morneau, unveil more specifics around that bridge loan program. They call it LEEFF. That's the acronym for it, where the application process has now begun. This is for big businesses, which will have to agree to certain terms as a result of taking these loans, which means some big conversations taking place in boardrooms across the country. Let's get some perspective from a boardroom expert. Richard Leblanc is a professor at York University who focuses on issues such as corporate governance. Richard, thanks very much for joining us. So just set the stage. What are some of the early conversations that big businesses in this country that are considering this loan program have to be thinking about right now?
Well, first of all, this program is designed as a lender of last resort. So these are the types of companies that have been hit extremely hard. Airlines, for example, that have exhausted bank loans and are now going to the government. So it has to be attractive, but it can't punish people. And there's some good and bad things about this that can be quite harmful if you're not careful, but are also have some good points as well.
Let's go through some of that, for example. Like, what do you think are some of the toughest issues that managements are going to have to decide on as a determinant on whether they get involved in these programs?
Well, the toughest, as I see it, is the interest rate. The interest rate starts at 8% in year 2, then it goes to 10% in year 3, and 12% in year 4. These are exorbitantly high interest rates. So if you're on a board, you're saying to the management team, listen, prime is 2.45%. Have we communicated with our banks? First of all, do we have a business plan that we can present to our banks to get out of this pandemic that is conservative and reasonable? And can we take our existing credit facilities and restructure them so they're almost ballooning? Once we come out of this over the next 2, 3, 4 years, can we recut our existing loan agreements with financial institutions before we go to the government? That's probably the toughest one. The good points are that it caps pay. LEEFF caps dividends. It caps shareholder buybacks. Another contentious one is it ties it to climate change. If I'm not surviving right now, I'm not worried about climate change. So there are some political elements to this that might be unpalatable for some boards.
And by the way, we should highlight, we're talking about companies that are generating, $300 million on average or more. And there are certainly at least a couple hundred companies on the TSX that would fit into this conversation. So there could be several companies that are having this conversation. You mentioned the interest rates, and I wonder if there's going to be some desire when those boardroom conversations are taking place to maybe ask the government a few questions, ask about flexibility. What do you think about the fact that you have essentially what feels like a one-size-fits-all program that the government has put forward? Do you think there will be any flexibility in the back and forth on this?
Well, I'm hoping that there will be, because a one-size-fits-all doesn't address the myriad of players and the complexity of some of the industries. So there's also criticism that you might even want an independent body with commercial people on it, as opposed to the government doling this out. So, you do not want one size fits all, and clearly the devil is in the detail. But what we see now is really clunky. So you want to come to the table, but you don't want to be too onerous on this, because people won't use it. And we see this with landlords right now; they're just not using the program.
So we'll ultimately see what the numbers look like. The application process has gotten going. The government obviously is concerned itself about getting into business with companies that or providing loans to companies that are doing questionable things with respect to paying taxes. What kind of conversation does a board have to have on the subject of tax avoidance? Like, I would imagine there are companies that think they're pretty clean on that side, and yet the further you dig, maybe you see there are certain things that you've done as a business to help your financial performance, which maybe the federal government will see differently. How's that all going to play out?
Well, that's a good point, John, is how comfortable are we with aggressive tax avoidance, including the use of shelters and Caribbean countries? There are several large, significant Canadian companies that will be approaching the government that have engaged in these types of activities. Now, the Prime Minister has said you have to have been convicted of tax evasion in order not to use the LEEFF program. But that bar is very low. I mean, there are companies that are highly aggressive in this field. So if you're a board, you're having these tough discussions. Do we want to be seen to be this aggressive, particularly now? The optics are crucial.
So lots to chew on. And then the other thing I wanted to ask you about is the stigma. You know, you make a good point there. There are a lot of companies of that size and scale that should be able to go out and find financing terms that might be more attractive than what the government's offering, and the government obviously setting those terms because they want to be seen as the lender of last resort. They'd prefer, and the finance minister said as much yesterday, he'd prefer you go and talk to those who you traditionally deal with. So for those companies that do decide, okay, yes, we need to be part of the LEEFF program, is there a concern perhaps about some stigma? In other words, that you're in worse shape than your rival or than the average company dealing with the COVID-19 pandemic?
Yeah, there's a stigma associated with partnering up with the government. A couple is that, you know, you don't have your commercial affairs in order. And also the government is a major player. Right now, the government can buy 15% of the debt in the form of shares. It can be observer during board meetings. It can really be quite onerous on companies. So tread carefully and watch about signaling effects to the marketplace that you might this should absolutely be a last resort for companies, because not all companies will be using this. And if you do, you might have signaling effects to your peers and to your employees and to your stakeholders. You're exactly right, John.
Okay, and just before we go, because of this warrant program that the finance minister unveiled yesterday, and then the prime minister talked a little bit more about it as well, here we are now talking about the government taking equity stakes in businesses, essentially. I mean, we're not quite sure where this is going to go, but what should we be thinking about? I mean, is this going to be the new norm that you see Canadian businesses having as key shareholders the Canadian government if things just continue to stay unsettled tied to COVID-19?
There is a precedent for this. General Motors in 2008, the government of Canada had a right to appoint one director to the board, but I liken it to an activist shareholder, which is never a good thing. And in this case, the activist is the government. So many government officials don't have commercial experience, and sitting in the room with a government official who owns 15% of your stock can have a chilling effect on boardroom dynamics and conversation. So proceed very carefully, because the government has clearly done its homework. It's learned from 2008, and it's got conditions on pay, climate change, etc.
We only have about 15 seconds left, Richard, but just to that point, the government can have an observer to the board. Can you tell us really quickly how that compares, for example, to literally having a seat on the board?
Well, briefly, an observer means you're entitled to all the documents, all the reports. You're entitled to be in the room. You just don't have a vote. But that observer status is a pretty big stick if you're the government.
Richard, great analysis as always. Thanks very much for joining us. That's Richard Leblanc. He is a corporate governance expert and boardroom expert with York University, joining us on that LEEFF program. We'll watch to see whether or not there's some high-profile businesses that tap into what the government is offering.